Hey EK Financial Group family, Aaron Kane here. Hope you're all doing okay. It's obviously during lockdown here in Melbourne, which is a bit of a shame for everyone. Weather's been quite nice last week too, but hope everyone's sticking in there. I'm doing okay with the homeschooling, and I hope you can all keep working. So let's get through this together and come out better on the other side. Look, welcome to the quarter one for 2021. Update on our Weinberg Private Managed Accounts. So what I'm going to go through now is effectively what happened from January to March in our portfolios. It's a bit of a market update and any changes in some what's been happening. So pretty much it's been another positive quarter for investors. So really with overseas share markets have set new highs. What helped this was the enthusiasm from a successful package of a further US stimulus bill and the prospect of an infrastructure bill. And obviously optimism around the vaccines around the world as well, coming out and everyone's starting to get their jab. But pleasingly, share markets did continue to gain ground despite renewed lockdowns in part of the world, which suggests that investors are becoming more comfortable with what we call the new COVID normal. Optimism flowed through to our domestic share market, so here in Australia, which is back in striking distance of setting a new record high. And the commencement of Australia's vaccine program seemed to instill some confidence in investors also. That it may be the end of sporadic lockdowns in 2020, but now that I say that, this is from obviously quarter one. We're obviously now hit a pretty sporadic lockdown here in Melbourne. But look, fortunately, the concerns around the end of JobKeeper here in Australia were short-lived because there was a pretty positive economic sentiment helped drive down unemployment rate to only 5.6%, which is far lower than even the most optimistic forecasters believed last year what it would be now. So it really has been a tale of two halves, and many fund managers that did lag last year have really outperformed now in this quarter, and that's the importance of diversification and what we do for these portfolios with Zenith is just making sure we've got really good diverse investment managers in there, and they're all kind of leading the pack. But look, leading the charge over the quarter was the Orbis Global Equity Fund, which delivered a return of about 8.2% for the quarter, which is 31% over the last year, 12 months, which is amazing. We allocated to this manager because of the exposure they bring to the portfolio, including underweight position in US and technology shares, which is nice that complements our portfolio because a lot of the global shares are a lot of tech stocks like your Google and your Amazon, Microsoft and Apple and so forth. Look, but following closely behind was Robeco Emerging Conservative Equity Fund, which generated a quarterly return of 8%. So Robeco is also guessing, different performance drivers compared to traditional global share funds through investing in emerging markets such as China, Taiwan, and India. We believe it's important to diversify the portfolio into these regions and all less common regions, as emerging markets often do experience some high growth coming out of a recession. So, and lastly, it was reassuring to see the Antipodes Global Fund outperform the benchmark over the quarter with solid 7.5% return. And these returns I'm talking about are just for the quarter. These 3-month period, they received 7.5%, for example. The fund intentionally targets the unloved areas in the market, such as manufacturing and banks, which generally outperform when the economy is recovering strongly, like we've witnessed in the last 6 months. And lastly, some portfolio changes. So what we did, we actually took out Aspect Diversified Futures, which is part of our alternative assets space, and we put in the Man Alpha Fund. So the Aspect Fund was in for a short period, so it was a bit of a band-aid fix till we got that Man Alpha Fund in. One of the great things about having Zenith on our side behind us and giving us these recommendations is there's so many funds out there in the market, and not all of them sit in these North accounts that we use or the platforms we use. So the great thing is they can actually go to North and say, look, we want this fund on the platform. So they actually have to physically get that fund available in your super, your pension accounts and so forth, investments. Then we can add them to the portfolio. So the great thing about that is we've got their weight behind them to actually get other fund managers that North don't know about or aren't really interested in onto the portfolio for you guys. So that's one awesome thing that we did. So that's part of the alternative space. The alternative space is there to help with downside protection and when markets do decline. So hopefully that's going to help with things going forward. But guys, hope you enjoyed this quarter update. This was for 2021 quarter one, and I'm looking forward to seeing you next quarter. Got any questions? Shoot me an email. Thanks guys. Bye.